What's going on, guys? Today I want to explain something, right? And I want to show you it in action. All right. A lot of times people say you need to have proper risk management. Um, but especially if you're beginning as a trader, you don't know exactly what that means. It sounds good, but how do you completely put it into action? Because you want to have a maybe 1 to 3 or 1 to 2 at least risk reward. Um, how how do you go about setting your risk on the table, getting into a trade setup where it makes sense to have your stop loss, what do you want, 10 pips away, 20 pips away? Is that at a strategic area? And does that work into my strategy? Right? So, with that being said, I'll go ahead and show you the strategy that I use. All right. Um, it's usually around market open. I trade New York session. I may find a good move if I can find a move before the market opens. That's great because I don't have to partake in the crazy volatility of market open. If I get in and out, I'm happy. But I got it on replay mode. This is where I execute the trades. This is the main move. I trade futures on Apex funded. All right. So right now I got it. I got it set back to 927. All right. Just before New York open. All right. To show you over here, we have the 930 candle, which was PPI. All right. For whatever reason, now the PPI is 2 days after the CPI report. As opposed to back. Like if the CPI was Tuesday, PPI was always Wednesday. I don't know why they skipped a day, but whatever. Usually the PPI report isn't much different from the CPI. Um, those who don't remember or didn't or don't know, the CPI came out pretty flat, right? But then surprisingly, well, at least to me, price started going up, right after the release of the CPI report. But then, at around after market open 9:30, it started to it started to go down. It started to go down. In fact, on the chart, well, I'm gonna show you. Well, I'm gonna show you. So, all right, they're talking Tuesday. All right, 8:30. All right. And as you see, it did rebound. But okay, so 8:30. Let's widen this up. 8:30. All right, you have your reaction. Boom, and then it starts to go up. Right, it goes up, and then at market open right here, it goes down. As you see, I lost this trade, and then 1 2. But it starts to go down. But then came back up. It was real choppy that day. Because you see, it's not all about the release. It's about the market reaction. All right. Inflationary times it could be funny. Use really they don't want as far as the jobs reports, they want a weak labor force. So people aren't spending money during high inflation. Okay, so if as far as NFP, if we got more people hired, if it's a stronger labor force, that's negative for inflation. But for price right after the report for it to go up, it was a little odd. Okay, but as you see, it did go down, and then however, it bounced all the way back. All right, but anyway, back to this thing. I was just explaining, the PPI report, what I was expecting based on the CPI. All right, and now I go in when I'm going about a trade. I don't want to get caught up in one bias, right? I don't want to get caught up in one bias. Like, I'll have my trading plan. I would expect it to go up. Like here, I expected it to go up first, right? Like it did at CPI. But of course, that was 8:30 release. This is market open. Um, But whatever the case, I expected it to go up to fill some fair value that it had from yesterday. That's this green area. Um, so let's go ahead and play it. I'll play it bit by bit. All right. All right. So this is the 9:30 candle. I'm sorry. Yeah. This is a 9:30 candle right here. All right. So as you see, so now when entering a trade, my play, okay, because it's not just one type of trade, but my main play that I look for is, market manipulation first at a certain area. Okay. Now the volume profile a lot. All right. But you have to go to the 5 minute to see the volume profile. So on the day of, volume profile is real time. So like you get more data from it, days before. But I this at this point, this was a good area on the volume profile, an attractive area, a lot of orders around that area. And before this happened, we had liquidity rest in this area. So by it being manipulated by market open volatility, I thought, it was going the other way and attacking the fair value. Okay, but I was ready to pivot if it went the other direction, which it did. So first, okay, we have that manipulation. All right, you know, um, taking the stops out, right, and then what I look for next is always like an impulsive move in a certain direction. Okay, so if it hit the stops here and then goes and displaces in the other direction, I'm like, okay, this is where they got their orders filled. I'm headed the other way. All right, price came back a little bit, like a retest, went up higher, so we got higher highs, further confirmation. All right, and it came back, gave me a good risk reward entry. All right, stop loss to the lows. All right, but now it comes back and it stops me out. Okay, so now, and this goes to risk, proper risk management. Number one, don't over leverage, especially on if I didn't build a cushion for the day or whatever, or for the week on an account. I'm I'm trading micros. I start off with 5 micros. That's really a half a mini. All right, so I'm losing like less than 200 bucks here. All right, but then okay, we got some conviction to the downside. All right, this is real time. So now it came over here and closed under this area at this volatile period. Okay, and like volume, right? And it's high volume because it's market open. Volume shows you the areas that they want to that price wants to take us. All right, so it's just best to ride with that. The trend is your friend. All right, and these trends, some of these mini trends, like on the 1 minute chart, can be very fast. Okay, so not like I'm here at the tip of my toes. What's playing out is either one out of two things can happen. It's playing out how you know it's supposed to be. So anyway, got stopped out of this one, got right into this one, and wrote it down to this level. All right, let's back up a little bit and just show you what that level is. Right, all right. So we had number one, yesterday's POC from the volume profile is at this level, all right, most of all. And then, we had price, dip to this level with these wicks, all right, dip to this level, all right. So we have that and the POC. So that was a very attractive area to me. So that's why I headed, down to this area. And as you see, well, as you will see, price respected it, all right, went down, right, recovering my losses, and and some. So like I made nine. I lost, just under 200 on the first trade, and then made 900 on the next trade. So it's good to have good risk reward, and you know, and I'm not staying in the trade, past it breaking the structure. I'm out quickly. You know what I'm saying? Not bleeding my account. I'm easy to admit when I'm wrong. I'm good to I'll gracefully bow out and then look for the next trade. I feel like beginners struggle at that point because they're afraid to be wrong. They think them getting the trade wrong. Oh, what did I do wrong? I'm not reading the market right. Nah, you're gonna be wrong. It's part of trading. Okay, just find your edge so you get over a 50% win rate. That's all that matters. Okay, and keep your losses small. So, you know, it was so this was mainly about this main move, covering this. I did hit a move right after because I seen, you know, uh, this area holding steady. This is the move they wanted. I expected to consolidate pretty much afterwards, but it actually went all the way back up. See that area, and that area was respected just how it was respected before. All right, and I'm talking about 2 days prior. Okay, this area was respected on Tuesday. Okay, we had the POC over here in that area on Monday. All right, and it comes back over this area and it gets rejected. So it happens as as what we would expected. Just have the conviction to trade with your plan. Of course, I'm not gonna just trading it without at least moving my stops to break even after I have some nice volatility. And then trailing my trade down. It's a pretty quick trade. All right, so yeah, but have conviction. Let it go to your destination. All right, take some profit on the way. Okay, pay yourself for waiting. But allow your plays to play through. And that's what the risk reward is all about. All right, one that you're not gonna be able to enjoy the one to threes, one to fours, one to fives, without allowing your trade to play out. Okay, so hopefully this helped you guys out some, a little meaning behind proper risk management. All right, if you need more tips like this, hit the plus sign, quote currency here to show you guys how it's done.